Hello everybody and welcome to a new video. In today's video, we'll be discussing the change of character extensively, and we will also be discussing what the change of character is and how we can use it. So let's get into the video. So let's imagine that we are in an uptrend or we are in a downtrend, right? And what you're looking at is our external structure. So if you didn't know, our external structure is also called our higher time frame structure. And this could be our 4 hour or our 1 hour, but I prefer the 1 hour minimum. Nothing less than the 1 hour should be our external structure. So in the first scenario, let's imagine we are in an uptrend, right? Let's imagine right now we are at a higher high. We know that eventually price has to pull back down from that higher high to create a new higher low, but we don't know when that down move or that pullback will occur, right? The same scenario with the downtrending market. Let's imagine we are at the highs of a downtrending market, which is referred to as a lower high. We know that eventually price needs to pull back down from that lower high to create a new lower low. But we don't know when that higher time frame pullback will occur. However, through a change of character, or specifically a bearish change of character, we are able to identify when that pullback, either in an uptrending market or a downtrending market, will occur. So what is a bearish change of character? A bearish change of character basically means is the market shifts from an uptrending market to a downtrending market. So as you can see, previously the market was printing higher highs and higher lows. And then as soon as the market breaks below the previous higher low that made a higher high, the market has shifted from an uptrending market towards a downtrending market. This is a very important point, guys. As soon as the market breaks below the higher low that generated a higher high, we are in a downtrending market, right? And how can we use this bearish change of character to identify when that pullback will occur? Because remember, I said, imagine we are at the highs of both markets, whether it's an uptrending market or a downtrending market. We know that eventually a pullback has to occur to create that higher low in an uptrending market or to create that lower low in a downtrending market. And with a bearish change of character, we're able to identify this. Why? So let's imagine, for example, we are at a higher high in our uptrending market. And let's imagine that this higher high is also our 4 hour or our 1 hour, which is our external structure. So what we have to do is, number one, we wait for the external structure to hit a higher time frame supply. So what do I mean by a higher time frame supply? This could be a supply level on the 4 hour, the 3 hour, the 2 hour, the 1 hour, right? This is referred to a higher time frame supply. Then number two, what do? We wait for the internal structure to switch bearish through a bearish change of character. So our internal structure is our 15-minute structure, right? So number one, we wait for the higher time frames to reach that higher time frame supply. Number two, we switch to the internal structure or the lower time frames, which is our 15-minute structure, and we wait for it to switch bearish to form that bearish change of character. Number three, what does this do to our bias? This provides a confirmation that the lower time frame has switched bearish and is now ready to facilitate that higher time frame pullback to create that new 4 hour higher low, right? And number four, to increase our risk rewards, we don't really want to be well, you can enter if you want, but personally, we want to be increasing our risk reward ratio. So the moment that a bearish change of character is made on the lower time frames, what we do is we re-enter of a lower time frame supply to increase our risk reward ratio, and we would probably put our take profit at a level where a new 4 hour or basically the external structure will make its new higher low in this uptrending market, right? So again, let's have a look at the opposite, a downtrending market. It's the same concept because in either markets we're at the highs and we expect that pullback, right? So number one, we wait for the 4 hour or the 1 hour, which is our external structure, to hit a higher time frame supply. Number two, we wait for the internal structure, which is our 15-minute structure, to switch bearish through a bearish change of character. Again, this forms as soon as price breaks below a higher low that formed a higher high. Number 3, once this occurs, this provides a confirmation to us that the lower time frame has switched bearish and is ready to facilitate the higher time frame pullback to create the higher time frame lower low. Because guys, remember, we said that we know that eventually price needs to pull back from that lower high to create a lower low, but we don't know when that will occur. Well, now through that bearish change of character happening on the internal structures, this provides a signal that that pullback is ready to happen and that the market is ready to create that new higher time frame lower low, right? And number 4, obviously, we want to be increasing our risk reward ratios. We don't really want to be entering off the higher time frame supply because obviously the stop loss is very large. So once that bearish change of character happens on the lower time frames, what we do is we wait to enter off a lower time frame supply. And this lower time frame supply, guys, can be on the 10-minute, the 15-minute, the 5-minute, whatever supply looks good, you can enter off that. Now, that is what a bearish change of character is. So let me summarize. The bearish change of character, we want it to appear on the internal structure, which is the 15-minute, and we want it to appear either at a higher high in an uptrending market once price reaches a higher time frame supply, or at a lower high in a downtrending market once price hits a higher time frame supply, right? So let's have a look at a bullish change of character. But now we are going to be looking at the lows of each market. For instance, in the uptrend, let's imagine that we are now at a higher low. We know that eventually price needs to go up to create that new higher high, right? But we don't know when. The same concept is with the downtrending market. Let's imagine we are also at the lows at a downtrending market at a lower low, right? We know that eventually price needs to, go up to create that new lower high. But how do we know when that up move will occur in both markets, whether it's an uptrending market or a downtrending market? How do we know that will occur? And this is through a bullish change of character. So what is a bullish change of character? So a bullish change of character is when the market shifts from a downtrending market towards an uptrending market, right? And this is created as soon as price breaks above the previous lower high that created a lower low. This is a very important point. Once price breaks above the previous lower high that generated that lower low, this provides a confirmation to us that the market sentiment has shifted from a downtrending market to now an uptrending market. So how can we use this bullish change of character model? So again, now let's imagine we are in an uptrending market. Again, guys, the same concept. Let's imagine that this is our higher time frame structure. And let's imagine that this higher time frame structure, which is our 4-hour or our 1-hour structure, is at a higher low right now in this uptrending market. Again, as I said, we know that eventually price needs to go up to create that new higher high. But how do we know when that will occur? We know that will occur once price hits a higher, once the external structure, which is the 4-hour or the 1-hour structure, hits a higher time frame demand, right? Number 2, we then wait for the internal structure, which is our 15-minute structure, to switch bullish once price breaks above the lower high that created that lower low. Number 3, after this bullish change of character occurs on the internal structures, which is our 15-minute structure, this provides a confirmation that the lower time frame is ready to facilitate that higher time frame up move in order to create that higher time frame higher high. So what I mean is that the internal structure is ready to facilitate that up move to create that 4-hour or that 1-hour higher high, because we know that eventually the higher high has to be made. And this provides a signal that it's ready to be made once the internal structure, which is the 15-minute structure, switches bullish at our higher time frame demand, right? And number 4, what we do is we enter off the lower time frame demand after the bullish change of character is made in order to increase our risk reward ratio. And we usually put the take profit at a point where, it could either be liquidity, imbalances, order blocks, but we usually want to be putting it at a point where a new higher time frame higher high will be made, right? Now let's look at the other scenario. So now let's imagine we are at a lower low on the external structures, which is our 4-hour or our 1-hour structure. We know that eventually, as I said, price needs to go up to create that new lower high, right? That external structure lower high. But how do we know when this up movement will occur? Once the internal structures, which is our 15-minute structure, switches bullish through our bullish change of character. And again, this occurs once price breaks above the lower high that generated that lower low. Once this occurs, this provides a signal to us that the lower time frames are ready to facilitate that higher time frame up move to create that new higher time frame lower high. Right, and again, where would we enter? We would enter off a lower time frame demand. This could either be a 10-minute demand, a 15-minute demand, a 5-minute demand, whatever lower time frames look good, we enter off that, right? And we usually put our take profit either at liquidity zones, at imbalances, and usually at a point where a new 4-hour lower high is made. So in summary, we wait for a bearish change of character to form on our internal structures, which is our 15-minute or our 10-minute structure. Once the market hits a higher time frame supply, in order to provide us that signal that the market is ready to facilitate that higher time frame pullback in order to create that new higher low in an uptrending market, or to create that new lower low in a downtrending market. And basically we wait for this bearish change of character to happen at the higher high in an uptrending market or at a lower high in a downtrending market. On the other hand, for the bullish change of character, we wait for the bullish change of character to form on the internal structures, which again is our 15-minute or our 10-minute structure. And what this will do is it will provide a signal to us that the market is ready to go up in order to facilitate the up move to create a new higher high in a uptrending market, or to create a new lower high in a downtrending market. And obviously we would like to see this bullish change of character appear at the higher lows in a uptrending market, or at a lower low in a downtrending market. So basically the bearish change of character, we want it to appear on the highs of our external structure, and the bullish change of character, we want it to appear at the lows of our external structures. So guys, let us have a look at some examples of the bearish change of character. So let us recap. So we said that the bearish change of character, we want it to appear on the internal structure, which is the 15-minute or the 10-minute. And then what we want to do is we want to wait for price to reach a higher time frame supply. And then we wait for the internal structure, which is our 15-minute or 10-minute, to switch bearish through a bearish change of character, which will provide a signal to us that the market is ready to facilitate that pullback to create that new higher low in an uptrending market, or to create that new lower low in a downtrending market. So again, this is an example of a downtrending market. We are creating lower lows and lower highs. So let's say right now this is our external structure, right, which is our 4-hour or our 1-hour. Let's say we have reached a higher time frame supply, for example a 1-hour or a 45-minute supply zone. What we do is we switch to the 15-minute or the 10-minute, right, and then we wait for price to switch bearish through a bearish change of character. Once the 10-minute or the 15-minute switches bearish through a bearish change of character at this higher time frame supply, this indicates to us that the internal structure has switched bearish and is ready to facilitate that pullback to create a new higher time frame lower low over here, right? Or for example, in an uptrend, we wait for price to reach a higher time frame supply, right? Let's say again, this is our external structure, which is our 1-hour or our 4-hour. and then we wait for it to reach a higher time frame supply, for example a 1 hour supply zone, and then we switch to the 15-minute or the 10-minute, and then we wait for the 15-minute or the 10-minute to switch bearish through a bearish change of character, which occurs as soon as price breaks below a higher low that created a higher high. Once this occurs, we re-enter on a lower time frame supply, and then this provides a signal to us that the lower time frames is ready to facilitate that pullback to create that higher time frame higher low, right? So let's have a look at an example on Euro AUD. So for instance, this is our external structure, which is the 1 hour, right? Why? This is our what? This is a lower low, a lower high, a lower low, and we obviously expect a lower high to be made here, right? Now this is our what? This is our higher time frame supply over here. Why? You can clearly see it's a 2 hour supply zone. It's an order block over here, a 2 hour one. This is a good order block because obviously there's some imbalances created, some liquidity, a bit of inducement here that's ready to be taken out just before price hits this order block. So we know eventually a new lower low has to be made, right? We know eventually a new lower low has to be made. A new 1 hour lower low needs to be made. So what we do is, number one, we wait for price to hit our higher time frame supply, which is our 2 hour order block over here, right? Okay, that's ticked the first box. Price has hit our higher time frame supply. Number two, we switched, for example, to the 10-minute, which is our external structure. So now we wait for the 10-minute to switch bearish through a bearish change of character. Let us wait for that. Cool. Identify where your breaks of structure is. So this is a boss, and this is now a change of character. This is a bearish change of character. Now this signifies to us that the internal structure has switched bearish at this higher time frame supply, at a higher time frame higher high. So where do we enter? We enter on a lower time frame supply, which is this nice order block over here, right? Okay, we enter, and then we put our take profit at areas of imbalances or areas of liquidity. Your first TP could be here, for instance. It could be here at this order block over here, or it could be at the low where you're expecting price to make a new higher time frame lower low, right? Cool. Let's see how price plays out. So here was our entry, right? Let's see what happens. Okay, take profit 1 was hit, TP2 was hit. So that is how we use a bearish change of character. Number one, we identify what's the trend, right? We are obviously in a downtrend. This is our external structure because this is our 1 hour structure. It's downtrending. Number two, we hit our higher time frame supply, which is a 2 hour supply zone. Number three, we switch to the 10-minute or the 15-minute, which is our internal structure. Number four, we wait for the internal structure to switch bearish. And then number five, we enter off that lower time frame supply, and we put our take profits at areas of liquidity, areas of imbalance, or areas where a new higher time frame lower low will be made in this downtrending market. Let us have a look now at our bullish change of character model. So as we said, we want this bullish change of character to appear on the internal structure, which is our 10-minute or our 15-minute structure, and we also want it to appear at a higher time frame demand at the external structure's lower low or the external structure higher low, because we obviously anticipate that at a lower low in a downtrend, we anticipate that price at some point needs to go up to create that that lower high, and at a higher low in an uptrend, we obviously expect that price needs to go up to create a new higher high. And how do we know when price will go up to create those new lower highs in a downtrend or a higher high in an uptrend? This is through the internal structure, which is the 10 or 15-minute switching bullish through a bullish change of character. So as I said, this occurs as soon as price breaks above the previous higher low, sorry, the previous lower high, which was this one that created a lower low, right? So let's have a look at some examples on Euro USD. So obviously this is our external structure. Why? Because as you can see, the market, this is the 1 hour firstly, and the market is uptrending. This is a higher low, a higher high, higher low, higher high, and now we are approaching a higher high. So obviously we anticipate that price needs to go up, but we don't know when, right? We need some sort of confirmation from the internal structure switching bullish through a bullish change of character to provide that confirmation that the market has switched from a internal bearish structure towards now a bullish trend, right? So let's have a look. Let's go to the internal structure, which is our 15-minute structure or our 10-minute, right? So let's wait for price to hit this higher time frame demand, which is here, which is this 1 hour demand. It's a nice demand zone, took out some liquidity here, created some imbalances. Yeah, it looks good. So let's switch to the internal structure and wait for price to hit it, right? Okay, so price has hit that. Cool. Now identify your breaks of structure of your internal structure. So this is our our breaker structure. And as soon as price breaks this lower high that created this lower low, the market switches bullish. So let's wait for the market to switch bullish through a bullish change of character to provide that confirmation that the market sentiment has switched from a downtrending market towards now an uptrending market. So let us wait. Okay, we're waiting. We haven't broken yet, right? It was close, but we haven't broken yet. Okay, now we have broken. Cool. Number 2, identify your lower time frame demand. So this is our lower time frame demand over here. It took out some liquidity, internal liquidities here, nice imbalances. It engineered some liquidity here, some trend line liquidity over here, right? So nice inducement. Now let's just wait for price to hit that. Let's wait. Cool. Now we're in the trade. So let me recap what happened quickly. So number 1, the market was uptrending on the external structure, which is our 1 hour. Number 2, we are currently at a 1 hour higher low. So we obviously expect the 1 hour, which is our external structure, to generate a new higher high. Number 3, this is confirmed as soon as the internal structure, which is our 10-minute or 15-minute structure, switches bullish through a bullish change of character, which suggests that the internal has switched from a downtrending sentiment towards now an uptrending sentiment, right? Number 4, we then enter off this lower time frame demand. And number 5, this provides a signal that the market is ready to facilitate that up move to create that higher time frame higher high. As soon as the market breaks this previous higher high, we are now ready to create a new higher high. Cool, very nice. Let's see what happens. Nice, cool. So our take profit has been hit, but generally what you could have done is you could have placed your TP anywhere where we have liquidities, we have imbalances here, liquidities. That's where you could have put your take profit. Now I hope that clarifies everything for you guys, and I hope you understand what the change of character is. It is a very powerful tool within smart money concepts. And yeah, thanks for watching. Please subscribe and see you in the next video.